Alright, for this video I want to go over the IRS form 1099-C for cancellation of debt income. And in this scenario we're going to look at a taxpayer here that has some COD income from the cancellation of credit card debts. And so we're going to look at how this gets reported on the tax return. So I've got the 1099-C here. We've also got the taxpayer's full 1040, so we'll cover all of these schedules that are required. We also have the insolvency worksheet here. So the taxpayer does do the insolvency worksheet to see if he can exclude some of the income. And then lastly, we've got one slide here covering some background on the 1099-C and then some more details on the fact pattern. So these 1099-Cs are generally filed when a creditor either forgives your debts completely or just a partial amount. So if you have a restructuring that goes on where they forgive just a portion of the principal amount, then you still get a 1099-C. Now, cancellation of debt income is included in our gross income under the tax code, right? And so that's section 61A specifically says that gross income includes the discharge of debt. Now, if you have cancellation of debt income, there are some ways to try to get that excluded from your earnings. And so one of the most common ways is to claim the insolvency exception, or in some cases if you have debt discharged through bankruptcy. Now, there are some other rules that apply specifically to qualified farm or principal residence debts, but in this example, we're going to be looking at credit card cancellations. Now, in order to claim this insolvency exception, the taxpayer has to have liabilities that exceed the fair market value of their assets, right? So in other words, your net worth is negative, right? You have more debt than you have assets. Now, to the extent that you are insolvent, then you can use that to try to exclude some of this cancellation of debt income. Now, in this fact pattern, we're going to have John Q. taxpayer has $6,230 of credit card debt that was canceled by the lender, and that was in May 2023. And now John has not declared bankruptcy, right? So that's important because what that means is that if you haven't declared bankruptcy, then you look to the insolvency exception or one of the other exceptions that might apply. Now, before the debt was canceled, his total debts altogether were $46,855, and the total fair market value of his assets were $50,855. Now, John completes the insolvency worksheet, and he notices that, well, he's unfortunately not insolvent because the fair market value of his assets exceed his debts. So he's not going to be able to exclude some of this COD income from his taxable income. So if we have a look at the insolvency worksheet here, actually, first let's start with the 1099-C. So we have the 1099-C, it's for the 2023 year. The total debt that was canceled here is the $6,230. Now within that line two amount, we have interest that's been accrued and unpaid of $1,020. So $6,230 is the total COD income that is going to be included in his gross income for the year. So if we look at the insolvency worksheet that John put together, we have the debts are at the top left-hand corner here, right? So he has this one credit card with $6,230, credit card number 2. He has a car loan and he has some student loans. So his total debts are $46,855, and the $6,230, this is the debt that's being canceled. Now the assets here, he lists out all of his assets. So the cash he has in his bank account, the fair market value of his vehicle, and so on down the list, right? In the right-hand column, we have his basis in these assets. So your basis is effectively what you paid for it, right? So in other words, he paid $23,000 for the vehicle, but obviously vehicles depreciate, so now it's only worth $18,500. So when everything is said and done here, we can see his total assets are $50,855, and his total debts are $46,855. So the insolvency here, he's not insolvent, right? His net assets are greater than his liabilities. And so for that reason, he's not going to be able to exclude some of this debt from his income. So he has $6,230 of debt discharged. The amount that's going to be excluded from income is 0 because he's not insolvent. And so the amount that's going to be taxable is $6,230. Now, line 10A, this is where if you had debts that were excluded, you would reduce your basis in your personal property, and those are the items highlighted here in yellow. You would have to reduce the basis in your personal property by the lesser of one of these three amounts. Now, I've got some examples in the description below. Have a look at those videos where we are insolvent, and so the taxpayer can exclude some of that income. But what we see here in this example is he's done this test and he's found that, well, I'm not insolvent, and there's no other exceptions that apply to be able to exclude these earnings. So if we have a look at John's Form 1040 here, so some of the basics here is 1040 return. He's a single filing taxpayer. This is for the 2023 tax year. And so on the income side, we can see he has wages of $42,600. He has a little bit of interest income from his bank accounts during the year. And so the cancellation of debt income is reported on Schedule 1. So Schedule 1, we have additional income and adjustments to income. And in Part 1, line 8C, we have the COD income. And so we can see there we're reporting the full amount of cancellation of debt income for $6,230. Now, John does have the Form 982 included. So he's got the 982 for reduction of tax attributes, but you'll notice here that everything is blank, right? So in Part 1, you can claim an exclusion if you had discharge of debts in a Title 11 case, or 1B, the more common one, is to the extent you're insolvent, right? And so in those other videos, you'll notice that the taxpayer is insolvent, and so he's marked 1B, and then he's completed line item 2 for the discharge of debt that's excluded from income, and then the reduction of tax attributes in Part 2. In this case, John doesn't have anything to exclude here, so the 982 that's related to the 1099-C, he can just exclude this from his return. He doesn't need to file this because there's no debt exclusion that's happening on this 1099-C COD income. So the $6,230 there, it's included in income. He adds up all his total income from Schedule 1, and then ultimately that amount flows through to page 1 of his 1040, line 8. So the $6,230 is included in his earned income, so not his earned income, but his taxable income for the year. And this amount is subject to your federal income taxes at whatever your marginal rate is. So the amount of tax that you pay on COD income is going to depend from person to person, right? Now, it's also important to note that this is not self-employment income. I've seen that done by mistake sometimes where people will subject that to this SE tax. Not self-employment income, it's just included in your regular federal taxable income. And so then you pay effectively whatever marginal tax rate you have for the year. All right, so that covers it for this video. I hope that was helpful. Any questions, feel free to leave a comment below, and certainly check out those other 1099-C and 982 videos if you are, in fact, insolvent and you need to complete that worksheet. All right, thanks so much for watching, and I look forward to seeing you on the next video. Thanks.